so that we can save this for our members. And here's Kyle. Perfect. Just missing a couple more. Welcome, everyone. We had a bumpy start to this with a dead link. Not my favorite way to start a roundtable for sure. We do have people coming in now. While I let people file in, we do have most of our panelists here today. We're really excited for this panel, so I'm thankful for everyone for being here and helping us with our member support and getting people the information that they need as they run their small businesses. Looks like everyone is now filing in here. Thankfully, I have a couple emails that say that their Zoom's not working, which is not working times. Let me just reply to these emails and then we can get this show on the road. There we go. Okay. So welcome everyone, and thank you all for showing up, and thank you for the panelists for being here. We have John and Danielle from PayEntry. We have Dylan from VersiTech, Doug from Idaho Employment Lawyers, Kyle from Associated Insurance, Lindsay from Keenly Insurance. We have somebody popping in right now too. Casey from Forcell Piper and Martin. Nathan with the Lewiston Tribune and Revolve Print Impact, hopefully will pop in here in a minute. Devin from Alsco, Dane from Ag West Farm Credit, and Nicole from Cushing Terrell. As we get going, if panelists don't make it, they're just not going to speak because I can't make things happen if they don't show up. And hopefully my inbox will have some people saying that they didn't get the link, of course, so we'll just go with it. The first panel is going to be about streamlining operations with payroll and POS systems. Luckily, we do have our two panelists for that, John and Danielle from PayEntry, and then Dylan from VersiTech will be able to talk about this, thankfully, because I could not talk about this at all. These are our quarterly roundtables, which we host so that we can bring information to our members and be of support to them as they get going on their business journeys. We hope that these roundtables will help people in all stages of their businesses, whether they're just starting out or they're seasoned business owners. We did our one last quarter, and it was really well attended, and there was a lot of really great feedback from it. So this current roundtable is what I hope helps bring together those solutions for small businesses so that when they are looking for solutions to problems they didn't even know they were going to have, they know that they have friends in the community. I'd love it if those of you that are panelists can put your emails in our chat so that if our members have any questions, they can reach out to you guys. And if they have any questions, they're also welcome to email me, and I will do as best as I can to make connections as we go. It's always our goal to make connections. So I feel like having your email in the chat and having me here ready to send people on your way will be a good way to help connect our members. Thank you, Dylan. I am going to go ahead and hand it on over here to John and Danielle. You guys have 10 or so minutes to talk about this, and then we'll tag Dylan in at VersiTech so he can chat. All of our panelists are welcome to share their screens. I see Danielle's ready to go. So I'll stop talking and let you guys go. Thanks.
Thanks, Tammie. Hi, everyone. Can everyone hear me all right? Perfect. Great. Hey, I am so excited to be able to join everyone here. Hopefully everyone is being protected and wearing green today. I've gotten harassed by my 9-year-old all day for not doing it. So save yourself the pinches. And yeah, let's get this started. So Danielle, if you want to go to the next slide, allow us to introduce ourselves. I am John Carino. I'm your business development manager for PayEntry, local to Idaho, and then alongside with me is Danielle Hesselink, who is my VP of Sales. And like Tammie mentioned, we'll be going over best practices for streamlining operations, reducing error in the workforce management, and we'll be taking a look at this through the employee life cycle. So we'll start off with the hiring all the way to retirement of the employee. So hiring, why it's important. This is a very pivotal tool for your company to have a solid recruiting process. It's going to help set the expectations for all candidates applying for the positions. It's going to create a consistent and compliant process for your business. And this will also help eliminate the word of mouth or friendly referrals who sometimes just don't work out for your business, but you're trying to help out. Um, and this will allow your company to attract that top talent for the positions as well. Now, Danielle, if you want to go to onboarding, hiring and onboarding should always go hand in hand. We want to eliminate basically where your new hire is not coming in day one of their job and filling out paperwork, taking about an hour or 2 hours, getting that all taken care of. It also will help reduce the risk of misplacing, mishandling, or filing the wrong information for that new hire. And also, statistics do show that new hires who are able to complete their onboarding packet before day one of starting their job are actually more confident in the company they'll be working for. This is also going to allow your business to focus more on the day-to-day operations than all the admin work that comes with onboarding. So I'm going to take a second here to pass it over to Danielle for the next phases.
Thanks, John. So let's actually talk about actually processing payroll. So there is a lot that goes into running payroll for a company. Starting off, once an employee hires their first employee, there are over 40 returns, deposits, and filings that the business owner is responsible for. Some of those are due annually, some are due quarterly, some are due monthly, some are due per pay period, and they're all percentages, and most of them change every year. It's a lot to keep up on. If the business owner miscalculates or misfiles any of those, the IRS doesn't tell you right away, hey, there's a problem here. So there's penalties, and then there's interest on the penalties. It's really not a fun situation to get into. And unfortunately, a lot of the times when people are reaching out to John or to myself, they're already in this situation and they're just saying like, hey, I have a problem here. Can you help me? So it's just really worth it to be proactive with
Can you
this.
give me one sec, just in
So
case I get
by
called on this game?
oh, someone talk? Okay. But by outsourcing payroll, that saves the business owner that burden of having to do any of this. So, for example, pay entry calculates, deducts, and files all of those payroll-related taxes and returns on behalf of the business owner. So all they really have to do is just report the hours, the earnings, if there's any changes, and really just make sure they have the funds in their bank account to fund it. So payroll can really take as short as 30 seconds, or we have auto payroll options for salary employees. It's just, we can make payroll really easy for those businesses that don't really want to mess with the tax piece of it. There's also multiple ways that you can pay employees. So direct deposit is definitely the most common way, but there's also live checks. There's pay cards available for if there is maybe an employee that might be unbankable. Um, we also have a really cool, it's kind of a newer industry, but it's called earned wage access or early wage access. But basically, it gives employees the ability to take up to half of their paycheck 2 days early. So for businesses that may have like employees that live paycheck to paycheck, it's a no cost, no liability to the business employee benefit that they can offer that really helps out those employees that may be in need. So there are just the short story there is there are just lots of ways that we can actually pay the employees as well. So timekeeping. Any business that has even one hourly employee really needs to have some way that they are tracking those hours that the employee is working. Having a timekeeping solution in place really just provides a reliable way to record those employee work hours, including when they start their day, when they end their day, breaks, meals, overtime, all data and information that's really crucial for accurate payroll calculations and just complying with labor laws. Plus, it can provide some really valuable insight into attendance patterns. Maybe somebody's habitually late, and if you're not tracking it, that might not be something that you're aware of. Labor costs and the true productivity of your workers. Say an employee is supposed to start their day at 8 a.m., but they consistently clock in at even 8:05. You would be shocked at how much time, even 5 minutes every day, and paid time adds up when they're not actually there or working. It's a significant cost savings for a business just to implement a timekeeping system for, like I said, even one hourly employee. It really, really makes a difference. Um, Also, just simply giving employees access to their own payroll data really saves the business owner time while improving the employee experience just by providing that transparency into their pay. By empowering the employees the ability to see their own check stubs, W-2s, PTO balances, being able to request PTO on their own, update their own personal information, or, say they're trying to take out a loan, and they need, say, their last 5 check stubs, not having them have to go to the business owner and request that data, they can just pull that information themselves. Saves that business owner so much time from having to go and do that, log in and pull that data. They can just have that access themselves. So with that, I'm going to turn it back over to John to wrap up.
Yeah, guys, thanks for listening to Danielle and I. I mean, a little info on why pay entry. Obviously, we're here to help save you guys from time, headache, especially being a small business owner. We completely understand what it's like to wear multiple caps for your business. The unique part about us is really our dedicated one-on-one experience that you would get with a client advocate. So no longer having to call 800 number if you accidentally paid Danielle 400 hours opposed to 40 hours, you would just reach out to your client advocate to get that corrected. We grow with your business by offering a full suite of service from beginning to end, just really depending on what you guys would like to utilize. And then for our fair partnership, we actually have great pricing that's simple, predictable, transparent. It's all monthly, not per payroll. So you can run as many payrolls as you would like throughout the month. And then, yeah, again, just to end our portion of it, feel free to reach out to me at any time or Danielle. We're more than happy to help. Again, thank you for your time.
That's it for us.
I love it. That's super helpful. Can you explain to us really quickly, like just in a couple of minutes, the $54? So if if an employer had 40 employees, would they still be able to get that $54?
So that price right there is for one employee. So basically it's just scalable based on how many people are actually being paid in a month. So it depends on what package that they're on, but for 40 employees on our payroll package, I'm doing some math really quick. They'd be looking at just over $400 a month for 40 employees. But that's something that John will custom quote them on because there might be some features that maybe don't want, but that's just a good starting point where the fact that it's a flat monthly fee where bonus payrolls, like John was saying, off-cycle payrolls, anybody that's paying their employees weekly is a significant cost savings because most payroll companies do charge per employee, per pay period, per service, and it's just really, really, it's a lot. So ours just being very simple, you could budget what your payroll expense is going to be for the year, and there's no hidden fees. We're very, very transparent.
Perfect.
I thought
Thank
the
you for that
question just come
explanation.
through.
Oh, is there another one? Let's see. Check the.
Yeah, I said, have you guys worked with farming or ranching operations? We do. We actually have a number of partnerships. It's one of the reasons why FAIR partnered with us with a number of the farm bureaus across the country. We have some of the special pricing, obviously the different codes that need to be set up with like the H-2A workers, and if they need tracking for units picked, if it's a farm that maybe picks blueberries, we have all sorts of reporting that we can set up to help keep farming and ranching clients compliant with how they want to track their payroll. So yes.
Awesome. Thanks for that question, Dean. Okay, well, if anyone doesn't have any questions, and we'll give plenty of time for Q&A after everyone's session, and I would imagine that in each section there'll be time for Q&A, but if you guys have any quick ones, please do put them in the chat. That's really easy for us all to see what the question is and for the panelists to answer. But if there's nothing else, we'll go ahead and move on to Dylan of Versi Tech. Dylan's going to be telling us how modern POS systems streamline operations and integrate with other business tools. Dylan, are you ready?
Perfect. Absolutely. Thank you, Tammie.
Thank
So
you.
as Tammie mentioned, my name is Dylan Yankovic. I work for a company called Versatech. We've been in the payments and point of sale space for a little over 30 years now, but I've been a fair member for, I believe we're going on, what, four, almost 5 years, I believe. So pretty good record there so far, but I've been with the company for about 5 years. Prior to that, I was with US Bank and Elevon on the banking and point of sale and payment processing end. So when it comes down to really modern point of sales, right, is, you know, coming from in my previous experience, you know, I've worked with retail, with restaurant, bars, nightclubs, of course. And when it comes down to having those, really all the different integrations, everything like that, the main thing is that it saves you time as a business owner. You know, you think about how long it takes for you to be able to get together your accounting spreadsheets, right? And be able to upload that into, you know, QuickBooks or whatever accounting software you have. You know, a perfect segue into pay entry. You know, when it comes down to using like any clock in, clock out data or anything like that, is that, you know, if you don't use an app like pay entry, or if you don't use a point of sale, then a lot of times it's pen and paper or a punch card. It takes a lot of time. And when you think about the amount of time on top of the potential errors that you can have by doing that, it really enforces the need to have something that is a lot more streamlined, right? Where it does the work for you. You don't have to spend all the time trying to figure it out. You know, you generally click a button and it's done. You know, and what you've really seen over the last, I would say, you know, 6 to 8 years in the point of sale side is there's been the shift from what we call a legacy point of sale into a cloud-based. So legacy point of sale systems, think those are going to be more of like your Micros or your classic Aloha. Those are going to be ones that there aren't really too many integration options available, right? A lot of it's going to end up being like that export-import relationship to where nothing's really going to be direct. And as point of sales have started to move into more the cloud-based, that's where integrations are really able to take off. And what that does is, again, it eliminates all the additional errors. It really helps you save a ton of time, but it allows you to get a lot more insight into your business that you may not already be aware of. You know, point of sale, it's one of those things where the good thing is that it tracks a lot. Bad side is that it only tracks what you tell it, right? But there's a lot of things going on in the back end that if you have it set up in a way where it's actually tracking those additional things, like how many drinks did you sell, right? You know, how many of this size shirt did you sell in the month of March in 2024, right? What was on St. Patty's Day like last year? Happy St. Patty's Day, by the way. I'm not wearing green, and my wife did pinch me this morning, so that's great. But what can you do? But you know, I think that, you know, the key thing here is that when it comes down to point of sale, the point of sale and payments industry really has kind of a negative stigma around it. You know, I'm sure that y'all have been hit by your stereotypical saving or your stereotypical payments rep of, oh, I'll save you money, I can do this for you. And it really ends up being where it's more or less that race to the bottom. And the big thing is when you race to the bottom, you generally lose out on the service side, which is really important, because if you're busy or you're trying to accept a payment, you know, that's how you keep your business up and running. And if you can't run that payment, who do you call when that hits the fan? You know, and that's really where our relationship with Fair has really flourished, is because that's what we pride ourselves on, is the service side. So when you're in that, oh crap moment, who do you have in your court? And we also double that down on the payment side specifically. So anyone at all that accepts credit cards, we do have a pre-negotiated rate with Fair, which is incredibly low. If you know, coming from years and years in the payments industry, but we do have it in there as well, as that we're incredibly confident that you're going to save a ridiculous amount on the payment side. So we do also offer that with that savings, is that if you'd like to use that savings to make a partial donation to Fair to help the organization, that is something that we can have built in as well. So that's something that we very much pride ourselves on. But so little credit card processing side note, but I will share my screen because I know you don't want to look at my ugly face all day. And just to show you one of our cloud-based point of sale options. So we do have 3 different options available. So we have Versi POS. If you're familiar with Rocky or Alan with Hump Hands or Pangillies, they're currently using Versi POS. We do have another point of sale called Tonic, which is on the screen here. This is going to be our cloud-based point of sale. We recently acquired them about 3 years ago. And then I do see JJ on the call, but we also partner with Camu, which I'm sure y'all are very familiar with whenever you go into a restaurant in the Boise area. I have a very good footprint there. But if we go down and take a look at integrations, this is just kind of the tip of the iceberg on a lot of different options that we have available. So when we think about any data that comes in through the point of sale, like marketing, right? So like customer information. So wouldn't it be helpful to know that, Tammie hasn't come and seen me for 3 months? Might want to give her an automatic email with a coupon. When it comes down to inventory, that's a key piece as well. So if you want to make sure that you're having an adequate inventory and allow that auto reorder if you dropped below a certain par level, that's all built in. We do have, so Chowly, this is going to be more for your restaurant specific operators, but if you think about like DoorDash, Uber Eats, Grubhub, they generally each have their own individual tablet. Chowly combines it all into one and just puts it through the point of sale, so you don't have to worry about all the different tablets. On top of that, we do have a couple integrations with different hotel and property management systems. So when it comes down to reservations and things like that, a lot of times there is going to be some sort of restaurant or bar on site. So this allows you to hook it back into your restaurant management system. And then we do not have pay entry on here yet, but at some point we'll get there. So, but we do have a couple different integrations with accounting and payroll as well. So really speaking to that, taking away that manual entry of updating your accounting side and be able to just click a button, it automatically ports over. That's the key piece. So what I would say is that if anyone is interested in looking at their credit card rates to see what it would look like, we do, free comparisons, of course, so you can get a side-by-side of where you're at today and what it would be with us. If you are interested in moving to a point of sale, the ones that we specifically own and partner with like Camu, we are more focused in the restaurant hospitality space, but under VersaTech, we do have many different partners across the US that support a variety of products. So when it comes down to your more retail or specialty shops, I'd be more than happy to make some introductions as well. So if you guys ever have any questions or anything like that, I'm always here. I put my number and everything in the chat, but either me or someone from my team will be reaching out and we can be more than happy to dig into it.
Perfect. Thank you so much, Dylan. Does anyone have any questions for Dylan? No chat, nothing. I have a question. So that is something that I hear about when I talk to the businesses, is about their point of sale and the cost involved in their point of sale. Is there something that sets you guys apart from the rest of the point of sale services that are happening broadly across the state? Because we're a statewide organization, so those that are in Boise are just a small portion of our membership. Is there something that you're seeing across the whole state?
Yeah, I think the big ones that you'll see from this is going to be kind of a two-sided answer. So a name that you'll see quite a bit, you'll see Spot On or Toast. And what they do is they have local reps that they're hiring in the area. They're going out and a lot of times they're buying business. It's really just to increase their cap rate from a investment perspective. But that's really where what they're interested in, is just acquiring different logos. Where we really differentiate ourselves is that we are locally owned, so we do not have, we don't have any additional investors or anything like that. So we have a lot more of that control. And it's also that, with control also comes that additional support, because if someone walks away from us, then we didn't do our job, but it hurts. A lot of times when it comes down like a Toast or Spot On, you walk away from them, your number on spreadsheet doesn't matter. So that's really where, on top of it. So that's kind of, more or less what's in it for us. What's in it for you guys, of course, is just making sure that when you call in and someone picks up the phone, we already know who you are. We already know, we are jumping ahead of it to make sure that we resolve all your problems and you're up and running. And you get that additional level that you wouldn't necessarily get that personalized service from a lot of the different providers out there.
Awesome. Thank you for that. And we have had so many of our members say such great things. So thank you so much for being a partner of FAIR and for helping us put together this roundtable as well, and for being here, even though I had a dead link. We can move on if there's no other questions. We can move to our next group of panelists. This will be the Building a Foundation with Legal, Insurance, and Healthcare Solutions. I do see Doug from Idaho Employment Lawyers, Kyle from Associated Insurance, and Lindsay from Keenly Insurance. So Doug, if you want to go ahead and start us off here, I'll let you guys go. You guys have quite a bit of time, but please don't feel like you have to max out your time. go ahead and just give us what you've got, and then we can move to the next one or ask, look for questions. Don't feel obligated to fill this space if you don't have it.
Thanks, Tammie. I appreciate it. Although I usually don't have any trouble filling space. So like Tammie said, I'm Doug Plass with Idaho Employment Lawyers. Just a little bit about what we do. We work with employers of all sizes. We do a lot of creating policies and handbooks for employers, employment agreements, severance agreements, settlements agreements, that sort of thing. We do a fair amount of training as well, for the entire workplace. Counseling for dealing with individual employee matters. A large part of what we do is involved with legal defense, although I would say our goal is to avoid that. But that might be lawsuits or complaints before the Human Rights Commission, for instance. We also do workplace investigations. There are times when it's appropriate to bring in an outside investigator, and we can do that. And we could also arrange to have others do that if we are representing the business. So I'm often accused of trying to scare people, and that is certainly not my intention. But I think it's important to point out what the important discrimination laws are that affect employers in this industry or really any other. So one big one that we all need to be aware of is Title VII of the Civil Rights Act. This protects employees from discrimination and harassment on the basis of race, color, religion, sex, and national origin, as well as from retaliation for bringing complaints. Another important law is the Americans with Disabilities Act. This protects employees from discrimination, harassment, or retaliation on the basis of disability, and also establishes an interactive process between employers and employees to discover reasonable accommodations to allow employees to do their jobs. This is one of the largest things that employers face claims for. Disability discrimination is consistently over 1/3 of all discrimination claims brought. So it's something employers definitely need to be aware of. Other important statutes are the Age Discrimination and Employment Act. This protects from discrimination, harassment, and retaliation on the basis of age and establishes that employees over 40 years old are in a protected class. And then the newest one to add to the mix is the Pregnant Workers Fairness Act, which was just passed in 2023. And this protects from discrimination on the basis of pregnancy. And just like the Americans with Disability Act, it has an accommodation process, but it's really broader in scope. And it allows businesses to, or it really requires businesses to temporarily relieve essential functions of the job for pregnancy-related issues. It also imposes a duty on employees to give simple accommodations. So we're talking like water at your workstation, or meal, or the ability to sit if you are required to stand, or the ability to stand if you're required to sit, or something like that. So it's a new law. We're still kind of working through it, but it's really designed to make it easier for pregnant employees to be able to do their jobs and stay in their positions. So those are kind of the major laws in the discrimination space. And how those work is the Equal Employment Opportunities Commission, the EEOC, enforces these laws. So employees would bring a claim to one of those, to the EEOC or its partner in Idaho, that's the Idaho Human Rights Commission. And they would investigate, and then they would have to go through that process before a lawsuit could be filed. Other important laws that employers often do not pay enough attention to is the Fair Labor Standards Act, the federal law that applies to most employees on either an individual or an enterprise basis, and established minimum wage, overtime provisions, exemptions from those. It has record-keeping requirements. Most of the records having to do with wage and hour stuff come out of the Fair Labor Standards Act. It has rules regarding tips, including tip credits and tip pooling rules that some of FAIR members may be really interested in. Also has child labor provisions, both in terms of what what occupations children can be involved with, but also how much they can work, when they can work, at what ages they can work. And then really importantly, it establishes civil money penalties for violations. So if you violate these laws, you could be facing, you know, a big check at some point, having to write a big check. The Federal Department of Labor enforces the Fair Labor Standards Act, but there is not the same kind of exhaustion requirement as under the discrimination law. So employees can just bring a lawsuit under this law. And also, we have the Idaho Wage Claim Act. This is a really important one for employers in Idaho, mainly because it establishes triple damages for withheld wages. So if you don't pay a departing employee timely enough, you could find yourself on the hook for 3 times the amount that they're owed. That's definitely something to keep into account. So Tammie asked me to talk about what changes are happening in the law, and there's a lot of really interesting ones. So as far as discrimination laws go, we have House Bill 421 in Idaho, which amends the definition of sex throughout Idaho to refer to only a biological sex. So that may have important implications on discrimination laws. We also have executive orders that came out regarding diversity, equity, and inclusion initiatives. So these have been framed as changes to the law, but really I'm here to tell you they're not. But they may signal some changes to the law coming. It's definitely something to watch closely. There could be an uptick in so-called reverse discrimination cases coming soon. We'll just keep an eye on that. Also, immigration is something that may be important to our members here too. We're likely to see increased enforcement on the immigration front. Employers may just want to perform their own I-9 audit in advance, so you don't get a situation where ICE shows up at your door and you don't know what you're going to be giving them. And it's important to have all the required documentation for all your employees. Also, we have some updated EEOC harassment guidance, the first update in over 25 years. What's notable is they've addressed technology, they've addressed conduct outside the workplace. Think about social media. Think about if your employees are posting things on social media that may have an effect in the workplace. That might be something you need to be aware of. And also increased guidance about sexual orientation and gender identity issues having to do with the 2022 or 2020 Supreme Court case, the Bostock decision, where it was ruled that discrimination on the basis of sex under Title VII includes discrimination on the basis of gender identity and sexual orientation. So look for increased guidance from the Supreme Court on how that's going to be interpreted as well. And then I mentioned the Pregnant Workers Fairness Act. We have regulations interpreting that statute as well. What's really good about that is that it's full of examples. There's over 75 different examples given in that guidance that kind of lay out how employers should handle when there's accommodation requests for pregnant workers. So given all of that, what should employees be doing right now? What I would say the most important step that employers can make is put in place an employee handbook. So this is the roadmap for employees and employers to ensure that everyone knows how to proceed when issues arrive. It should, at a minimum, include equal employment opportunity language, basically what you need to do to comply with the law, and procedures for handling complaints of discrimination and harassment. Spending time putting a good handbook together is going to help your business do better in the long run. And it's also your first line of defense when a complaint arises. So if you can show that you had good policies in place that were followed, you're going to be in a much better position if you're ever faced with a workplace complaint. Second thing that employers should do is to train your supervisors. So under the law, supervisors are held to a higher standard. So if a supervisor has harassed an employee, for instance, that is imputed to the employer. So the employer is going to be on the hook for that if it's done by a supervisor. And if you don't have trained supervisor, you just kind of let them out there in the workplace without making sure that they know how they need to be behaving and dealing with complaints and that sort of thing, you could get yourself in trouble. Another issue is record keeping. I would stress this over and over again: keep good records, document employee performance and conduct, document your coaching conversations, and really anything that goes on with your business. Often we see situations where an employee makes a complaint, and then the employer says, well, this is totally made up. This isn't true. And I say, well, what records do you have? And they're like, well, we don't have anything. So you don't want to be in that situation, because it's a lot harder and more expensive on the back end to try to figure that out. And the last thing I would say is you're going to want to stay abreast with the law. So things in employment law can change really quickly. You want to watch the news and get legal help when you need it, to try to understand how these changes might affect you. That's all I got.
Well, thank you for that. That's a lot an employer has to worry about. I think it was Lindsay over at Keenly Insurance was the first person to tell me that people over 40 were in a protected class. That kills me, but okay, we'll go with that. But I think it's really good information to know that there are a lot of rules our employers have to follow, and it's always changing for sure. Thank you so much for that, Doug. I really appreciate you giving us that view, for sure. Does anyone have any questions before Ed just popped one in. Ed, I could almost see you thinking over there. Ed wrote, what is the trend in Idaho for what might be termed employee-driven frivolous class actions against employers? It's out of control in several states, especially related to wage and hour claims, where even one minor event, a single individual clocking in and out incorrectly, may bring about a $500,000 settlement.
Oh, I have not seen a lot of class actions happening in Idaho. Actually, we haven't been involved in really any one recently. But it's definitely something to be aware, right? So, employees that are similar situated can band together and make claims. So the example you have there, a single individual clocking in and out incorrectly, yeah, that might be the thing that spurs it. But in order to certify a class, you're going to have to show that a lot of other people are in the same situation. As far as the dollar amounts, and whenever you get involved in litigation, it's going to be really expensive, unfortunately. And really, that's why we say get all this stuff in on the front end, and you're gonna do much better on the back end.
Thanks for that, Ed. I appreciate your question. With that, Doug, hang out. So when we have our Q&A at the end, if anybody has any more questions, you can be the expert in the room. Thankfully, I'm glad it's not going to be me. Kyle will have you up next with Associated Insurance. He's going to be talking about tailored business insurance solutions with a focus on liability and property coverage. Kyle, you are up.
All right. Thanks, Tammie, for having me. And thank you for putting this panel together. A lot of great information. So Doug and I don't get invited to a lot of parties because he scares people. And then I talk about insurance, which doesn't make people happy. I'm going to share a screen. So I've been in the insurance industry for 30 years. And I don't think we've ever, can you guys see that screen? Anybody?
Yep, we can see it.
Okay, perfect. So I've been in the insurance industry for 30 years, and we've never seen a market like this before, where it's been so hard for so long. So back in, I'm going to move my camera because it went to a different screen. So hopefully you guys will be able to see me okay. This technology is new to me. I usually do a lot more face-to-face stuff. So anyway, so about in 2020, the insurance industry started what they went from a soft market to a hard market, where all of a sudden the insurance rates, instead of giving discounts, they started going up. So I just want to cover 3 things with you today, which is just kind of understand some key coverages, some coverages that are overlooked, and then some cost saving strategies. But first, I think it's important to talk to you about the state of the insurance industry. And right now, even on your personal insurance or even on your business insurance, you're starting to see premiums rise and continue to rise each year. And one of the main causes of that is inflation. If you look back on what it maybe cost to build a house just a few years ago, you see that it's got up quite a bit. So construction costs and labor costs since COVID has really driven up the cost to replace a home. So that's one reason that's causing the insurance industry to raise their rates. The other side of it is vehicle costs go up as well. So what used to be able to buy a car for around $30,000, now you're seeing cars that are more around 40, 50, 60, all the way up to $100,000. And then the issue that you have with vehicle expenses too is the cost to repair or replace them. So if you ever notice that with body shops, when you take your vehicle in, there could be a wait to even get an estimate on your vehicle, or it could take longer to get the vehicle replaced. In most cases, the cost to fix the vehicle has gone up quite a bit. So that's another reason why the insurance industry has increased so much. The other thing that's out there, and it's in the news almost on a daily basis, are these natural disasters. And anywhere from hurricanes to wildfires to tornadoes to hail storms, it's just driving up the cost because the natural disasters are happening with more frequency. So in Idaho alone, in 2024 was one of our worst wildfire seasons we've ever had. We didn't lose a lot of property, but we did lose a lot of acreage. And because of the wildfires that are happening in California, it's really brought to the attention to the insurance industry the concern with wildfires and the catastrophic losses that they have. Now with Idaho, people look at Idaho and go, well, we don't have the natural disaster issues as much as the rest of the country does. But what we try to tell people is that it's not the United States of Idaho, it's the United States of America, which means what happens in the rest of the country, we're also affected by that. Now, Idaho is a great state in the fact that we don't have a lot of natural disasters. Our rates still tend to be a little bit lower than some of our Western partners, but we are feeling the effects of these natural disasters. And then also the increase of claims. So we're just having more frequency issues, more claims are happening. In Idaho, one of the main property losses that we actually have is water losses in Idaho. And that's more of people that maybe do-it-yourselfers, or they're just having issues where pipes burst because they freeze, or you just have water leaks and things like that. So we're having a little bit more frequency with that. The other thing that's going on is that there's stricter underwriting policies. So back in a soft market, as I mentioned, is that you used to be able to take a business and you used to submit an application to an underwriter. And if it was a soft market, they would just grab it and run with it and try and price it in order to write the business. But now that it's a harder market, their underwriting requirements are a heck of a lot stricter, which means they're just not taking a submission. They are actually looking at what you're doing, what the business is doing, what they're trying to do to prevent claims from happening. And if it fits in their category, they'll take a look at writing it, but they're not really willing to put a lot of credit on it. They're just willing to maybe give a proposal out on it. What we're also seeing is that there's a lot more questions being asked about a business too in their operations. So it's not as a simple process as it was in the past, just a lot stricter requirements from the underwriting side. The other thing too is just the importance of risk management to secure better rates, and kind of what I alluded to when we were talking about getting a submission from an underwriter is that what are you doing as a business to prevent claims from happening at your place of business? And so they're going to look at that pretty heavily, and the word loss control gets thrown out a lot, which is they'll go in and kind of do a risk assessment and just see what operations you're performing, what you're doing to prevent any claims from happening, and then they can determine a rate off of that. And then the last thing I would just add is nuclear verdicts is a word that has been out there for just a few years now. And what they are, those are lawsuits that are going to a jury, and a jury is deciding what will be paid out on it. And what's happening with nuclear verdicts is that instead of being awarded maybe $1 million or $2 million, these verdicts are coming out in $10 million or $20 million. We actually saw a liquor liability claim that happened down in Texas that the jury awarded $300 million to an individual that was hurt by a drunk driver. So that is really driving up the cost of insurance. Really quickly, just some essential coverages that you would normally have with your business. And as a business owner, you would see this with your general liability insurance. I mean, this protects you. In a lot of cases, most people think about it as just if people come on your premise, if they were to slip and fall, get injured on the premise. But the liability side deals with the operations of your business. This is where those nuclear verdicts come from, is that they're more liability related. They're not property related. And they deal with what your business operations are and if it causes bodily injury to someone or property damage to someone. So in most cases, everybody just has a basic general liability policy. There, the recommendation is that you shouldn't carry less than $1 million a year on occurrence and 2 million aggregate. Property insurance, obviously it covers your buildings, your equipment, inventory, protects you from fire, theft, weather damage, many things like that. The big thing that we'll talk about a little bit too is that on the property insurance side, with what's going on with inflation, a business should really be focused on this almost on an annual basis. So if you're not really reviewing your building values and your inventory level every year, you may be sitting in a situation where you're underinsuring yourself and could get caught up in a co-insurance penalty. And not to go deep into co-insurance because it's a long one, but basically what it is that the insurance company is saying that you need to insure your property to a certain percentage, and if you don't, they'll diminish the claim by that amount. And if you're not reviewing your property values, at least on an annual basis, I highly recommend that, especially with what is going on with the cost of construction. Everybody has workers' compensation, not a lot to explain there. And then on the commercial auto side, just protects your vehicles. But I think the one thing that's really overlooked is this hired and non-owned auto coverage. So a lot of times when you talk with the business and they'll say, I don't have a commercial auto, why do I have auto insurance? This hired and non-owned auto coverage is designed to protect you. It's called a secondary coverage. But what it is that if you or an employee happens to be running errands or doing operations for the business and they happen to get into an accident, their insurance will be primary, but because it's a business related situation, the attorney could come back to the business and say, you're also liable in this situation, and we've used all of the limits of the primary coverage, and now we need help on the secondary coverage. So in most cases, you should always have a hired and non-owned auto policy added to your business, whether you have autos or not, just to protect you from a secondary situation. And then common overlooked coverages. The biggest one is business interruption insurance. This is very, very helpful, and this actually will determine in some cases whether a business will be able to come back from a loss or not. But what business interruption insurance provides is it's a loss of profit. It'll cover ordinary payroll, and it'll cover your monthly operating expenses. And in most cases, it's set up over a 12-month period. A lot of times you can ask for an 18-month extension or sometimes 24. But basically, if your business cannot perform out of that location and there's nothing else you can do, this will keep paying the profit, the payroll, and your monthly expenses so that it's not coming out of your pocket, and then therefore you're waiting for your business to be put back together, and this helps in that recovery process. The other thing is equipment breakdown, which is kind of self-explanatory, other than I think a lot of people think that it covers wear and tear. But that's not the situation. This is almost like power surge situations where maybe high voltage comes through the line and shorts out your equipment and then shuts it down. And then you have, which would be the next one, which is food spoilers, where you could actually have loss of product. We've actually had a situation like this where someone actually hit a power pole on the 4th of July and shut all the power off for the business in the area. And one of the people actually was a restaurant there that ended up losing product because it was over a period where they were going to be closed for more than 24 hours and didn't know about this situation. Food contamination and other coverage that seems to get missed. Sometimes the insurance company throws it in, but it's really important to know what value you want to be at. I'm going to kind of go through this a little bit faster. Cyber liability, we were talking about the POS systems. But it's really, this is a very overlooked coverage, and a lot of people think that they don't need to have it. But if you have a computer, this is a coverage that you really should have. In most cases, people will say, well, I don't store credit card information or anything like that. But what you do have is that you have employees, and a lot of times you have your employees' information on the server. And if that information gets hacked into and taken, then that means you're liable for that information. So cyber liability is helpful in more ways than just a payment service system. I mean, it also helps with the software and the hardware both in replacement wise. It does forensics, so if you are hacked, it pays for hiring someone to come to figure out how they got into your system, and then if upgrades need to be made. This next one, actually, Doug covered very heavily. This is the employment practices liability. And this is actually coverage for the lawsuits that Doug was talking about, whether it's discrimination, harassment, or wrongful terminations. We have found in a lot of cases that we've worked with is that almost most of our cost comes out more on the defense side than it does on the actual payout. Doug, you can elaborate more on this, but a lot of times it's the accusations that ends up being the costly piece, and then we have to prove whether those are true or not. But that is a coverage that you can get. They can go up as high as $1 million in coverage I've seen for this, and sometimes even higher. So it's good to have. Inland Marine is another one that sometimes gets overlooked, is that if your property leaves the site, then the property insurance goes away and it has to transfer to this inland marine coverage. If you're in the restaurant business, a lot of time you don't think about it, but with catering, that is a situation that would need to be covered off-site. Pollution, we see that. And then umbrella, which is that you have extra coverage that can go over your liability and your auto liability as well. So going a little long. So really, what can you do to really reduce your insurance? And this is really what we can do right now to try to make an impact going forward in 2025. You hear Flo say all the time, bundle your policies. That is true. The more policies you have with the carrier, they're more willing to work with you and get you better rates. You can increase deductibles. So you could increase your property deductibles, or you can increase your auto deductibles. It's just got to be manageable for you if you do increase your deductibles. Some of the other things is just enhance some safety measures. If you have a small fleet, or if you have a fleet at all, dash cams are the thing of the town right now. Everybody's talking about dash cams because they are video evidence for you to prove whether it truly is your fault or somebody else's fault. Having a good written fleet safety program, make sure there's good cell phone policies. And the MVR checks is exactly what insurance companies do more than anything. They want to know who you're putting behind the wheel. Are they older? Are they younger? Do they have a good driving record or not? That totally impacts your rates. The property maintenance side, every carrier is looking like that. They want to know what updates you're making. So if you have an older building or even a newer building, what are you doing to maintain it, keep it up to date? Do you have like a refrigerator maintenance program in place, food protocols? The hood and duct cleaning is really important that that's done on a regular basis. Liquor liability, they definitely want to know about your training. And every time we can give the underwriter more information is a way to help keep your premiums down. Hiring practices, which kind of goes with Doug saying, a good employment handbook is a good thing to have. Make sure you do an annual review so that you're eliminating coverages. So if you've sold things, replaced things, update it, any of that stuff that you're just keeping up with it. And then on the work comp side, if you do have injuries, do you have a light duty return to work program where you can bring workers back to keep down the indemnity cost of the claim? And then lastly, the other one is just work with people that specialize in your industry, because they have personal relationships with these carriers that write the business that is associated with your business. So they understand it, they understand the rates, and they're more willing to look at your business differently than if they were just to look at a general business. So the most important thing that we try to just say is that an underwriter doesn't look at a business blanket as a blanket look. They want to look at you individually. And if you're doing these steps to keep their costs down, then they're willing to work with you more favorably on your rate. So sorry, I went a little long, a lot to cover there, but I just wanted to make sure you guys kind of saw what's going on with the industry.
Thank you so much, Kyle. That is a lot to know for sure for a small business. Thank you for giving us that overview. I don't see any questions in the chat, so we're gonna go ahead and go straight on over to Lindsay. Kyle, if you don't mind not sharing your screen so that
Yes. let me get
Lindsay's
to that.
able to when she is ready. I know you guys are doing such a great job in giving such good information, so please don't feel, Lindsay, like you're stuck to a time frame. You were given 10 minutes originally, but please just feel like you give us the information you want to give us. We're totally fine.
Oh, well, thank you. Thanks, everyone. Hey, 2 insurance people back to back. I already know that you're not excited. I actually had a client ask me if I was really excited to have the executive team meeting with me once because he has a friend that goes on airplanes and tells people he sells insurance so that they won't talk to him. So I already know. I'm like, wow, it's like a killer. Payroll, attorneys, save the insurance for last. But I'll try to make this brief. I'm Lindsay with Keenly Benefits. What we do is we help employers build smart benefit programs, and that's not necessarily just doing the same thing that you're familiar with. It might not be a fit for your organization to have a metallic level health plan through a carrier, for example. Those costs are really high, and I'm mindful of, that the fact that your margins are, whether or not you're in a restaurant or if you have a agricultural farm or whatever, sometimes your margins don't have much give. So I just wanted to talk really briefly. It looks like I planned for 45 minutes. So I could stay all day. No, Kyle just goes off camera. Sorry, just funny. All right. But anyway, I want to talk about the state of benefits today, specifically in your industry, restaurants, what your options are, what's available. That's more than health insurance compliance, and then any additional steps. So 30%, or well, roughly 32% of hospitality workers actually have health coverage. And I think when we're talking about restaurants specifically, and I would say even with agriculture, when you are trying to recruit people to work for you long term, a lot of people are like, oh, waiting tables or working in a restaurant is not a real job, although it's very real. You show up every day. Doug was telling you your risks as an employer. It's an incredibly real job, but we tend to equate real job with having a health plan or retirement savings or something else in addition to showing up to work every day. So 77% is the average in other industries. This isn't specific to restaurants. This is specific to everybody in the country. In fact, I would say, I'd venture to guess it's more like 75% of families in this country cannot afford their deductibles and they're out of pockets. The cap on out of pockets for this year is $9,200. And if you have a family on a plan, that's $18,400. So I would say most people would nod their heads like that's not affordable. And this is also common nationwide. 33% of people in the restaurant industry specifically skipped care last year, which has compounded health issues overall across the country. Now, this is a fundamental problem within our healthcare system. It's not specific to you. If we were to look at the country overall, that number would be much higher. So, which tells me probably have a lot of people under the age of 26 who might still be insured on a parent's plan. And maybe they're eligible for the Medicaid expansion, or they're getting tax credits through Your Health Idaho. Although the new voucher requirements that they are trying to implement in Idaho will create some disruption there. Historically, with the voucher programs, there is a large gap of individuals that were eligible for the Medicaid that met the work requirements, but somehow were overlooked. And it's just the way that those reporting systems work. We're going to spend a lot of money in voucher reporting and not get much from it. We'll spend more in voucher reporting than we will get. Oh, wait, I forgot to pull that slide out. So what are your options? There's a lot more than we've ever had. there's the traditional health insurance plans that you're accustomed to. There's level funding, ICHRA, which is an individual coverage health reimbursement arrangement, direct primary care. You can work with direct contracts. We have contracts directly with provider. I have a restaurant group that's doing this right now, and it's given them a lot of flexibility and has enabled them to continue their health plan coverage for their employees. Oyster Sunday is a restaurant association national health plan option. Then you can also do dental, vision, short and long-term disability, and we actually even have emergency savings programs as well, which is phenomenal. So traditional fully insured plans, the benefits are it's predictable, it's branded, everybody understands it, it seems easy. Got the network. The problem is it's expensive. Your premiums increase annually. There is no underwriting. There's no flexibility. So within your industry as a whole, whether that be agriculture or restaurants or anybody else who's within that food delivery system, your teams tend to be younger and healthier. So you don't have any leverage there for less utilization, and there's no transparency. So you don't really know what things cost, and you cannot change anything. Direct contracts with a level funded program. We have a direct contract with St. Luke's Health System. This is a little bit more, there are a few more components to this, but you get to self-fund this. Well, you're buying insurance differently. You're not really self-funding. And our contracts, when people see these providers, they don't have a deductible or an out-of-pocket or a copay or anything. And so they can go to our direct contracted providers and not pay anything. And then if they go outside our direct contracts, there is a cost. There are more compliance steps with this option, and it's not ideal for everybody. And there are multiple vendors that you have to coordinate with. We do try to make that as easy as possible, but there are additional things that you have to do, and there are laws that we have to follow for additional reporting. There's carrier-based level funded programs that are similar to what we're doing in direct contracts. We just omit the contracts and we can use a regular network, but they operate like a hybrid. So it gives you the same transparency and claims information, the same ability to negotiate, and then also add in different components that can save your team money, like a disease management program for type 2 diabetics, for example, or something for maternity care, so that if you're a younger demographic, you might have a lot more people having babies. If they do the Maven maternity program, they wouldn't pay for any of that, for example. But these produce better outcomes for your team, and they lower your costs overall. They set these as a fixed monthly premium. They help you manage some of the compliance. It's bundled all under one carrier. There are risks that if your group runs hot. So I had a restaurant group on this, and they had a really bad claims year, and we had to move off of the program. Before, they had an incredibly competitive employee rate, but because there were a lot of claims, that plan went away. So just so you know, it goes both ways. Oyster Sunday is an association plan. It's a group that if you Google Oyster Sunday, you'll bring it up. They actually help people within the restaurant and agricultural industries to market their programs, but then also they've designed a health plan to help restaurant owners like yourself. There are some lower cost premiums, and it's very simple to work with Oyster Sunday. They've done a really good job. You do have deductibles and out-of-pockets of an out-of-pocket of $9,200. The biggest challenge is the network. They don't have one, and it doesn't. Not having a network just does not go well here at all. So there will be balance billing and heartburn, and so that's the biggest challenge with them. But they do have some additional options that don't include a full health plan, and we'll get to that. Individual coverage HRA, this is a really popular solution, especially if you're an applicable large employer. So I feel like I'm picking on restaurants, but restaurants specifically tend to have a large amount of staff members, and you might have 30 full-time employees, but your combined part-time employees move you to 50 employees. And that is across all of your owned divisions. So if you have a greater than 1% owner share in any other company, they combine, and you're earning money on these organizations, they combine those employees to produce the applicable large employer status. So if you're one of those that owns multiple entities, this is something you want to keep in mind. The individual coverage HRA came out in 2021. We've been able to sell them. They continue to have an uptick in popularity, mostly because you're out of the insurance business. It's a way for you to comply with the Affordable Care Act and meet those requirements, offer coverage, but not have to deal with a health plan renewal and looking at all of your options and making a decision, or all of the other components that go with that. Pretty much the basic compliance that you have to do for this plan is maintain a COBRA program and file your 1095-C reports, as well as keep the premium costs within the federal requirements. You can schedule that. So it'll be based on income tiers and age, but income and age, but it's in blocks. You can't do it specifically for each individual. So, or you can say salary and hourly employees have a different benefit, but it's really, you don't get too creative with classes with this option. But if you've never had a health plan before and you're an applicable large employer, you don't have a participation requirement. You just have to make an offer of coverage. You pay a portion of your employees' premiums that they would purchase on the individual marketplace, and your employees pay the difference. And we have some really cool solutions that simplify that, so you don't have to manage it manually. That will blend with payroll or other services that you offer. Supplemental coverage. So some of you might be small. You might like, Lindsay, I have 10 people. What do I do? Well, we've already implemented Nice Healthcare as a member benefit with Fair Idaho, and that's a direct primary care solution, which is great because they will meet with your staff wherever they are. So if that's at work or home, they can come to you. They work virtually. It includes full spectrum primary care services, physical therapy, mental health talk therapy, 550 of the most commonly prescribed generic drugs, and some care navigation support. So if you have to see a specialist, they help to navigate that with you. But sometimes it's not going to make sense for you to do a full medical plan. Dental, vision, short and long-term disability, and life insurance are always very popular. Dental and vision, easy to do on a voluntary basis. You will have, and you can offer to your part-time and full-time employees. If voluntary means you don't have to contribute, it's just something that you offer on a payroll deduction basis. For disability and life insurance, there aren't any programs in our state where the state will give an employee or an individual earnings for a short-term disability event. So that would be injured in an accident. I had this happen with a restaurant owner in Jackson Hole. They offer short-term disability for their employees and long-term. And an employee was out, had an incredibly severe concussion, could not come back to work for about 5 months. And thankfully that this employee had the short and long-term disability, because the short-term disability paid them 60% of their gross wage until they were able to return to work. And when he did come back to work, they could only come part-time for a little bit, and that long-term disability offset that. These plans are really, by far and large, super minimal cost to implement, just very low cost to implement, but give you the biggest bang for your buck. Because when that happens with a coworker and somebody knows that they can still pay their rent and we don't necessarily have to do a huge GoFundMe, it just looks really, they know this was something you offered as an employer. They have the most success if you're doing a really great communication campaign. Indemnity health plans. Oyster Sunday also offers an indemnity health plan. And I'm sure there's lots of people in here that have heard of Aflac or additional Colonial Life or accident insurance, hospital insurance. An indemnity health plan is like they have blended all of these together, and there is a cap for each benefit. So it'll pay for 3 days in the hospital up to $25,000, or it'll pay for a specific schedule of benefits, and there is no additional benefit above that. And so the biggest breakdown with that is it's not compliant with the Affordable Care Act, and employees oftentimes misunderstand what they have and could end up sideways with a carrier or with a medical provider. But it is a great low-cost option for part-time or seasonal employees, so they can participate easily with that. And then you can add in that DPC, which is direct primary care or a telemedicine benefit. We also have telemedicine benefits that you can buy on your own that include mental health therapy that you can use for any condition at any time. It does include advocacy in case I did go to the hospital and I have big claims or I need to get something approved that has that. And these benefits will cost around that Fresh Bennies benefit is about $20. It's less than $20, about $17 per employee per month. But it's a great medical benefit. I did talk briefly about employee savings accounts or emergency savings accounts that you can contribute to as an employer. Another great way to help establish a savings culture within your organization and incentivize employees to set money aside, even just for the basic expenses. So instead of having to do an entire 401k program, you can do these emergency savings programs. My favorite is Sunny Day, and you can match as an employer up to $50 a year, but you can break that out over a quarter and match employees' contributions, and they can do micro savings. Doug, you can step in if I'm wrong on any of this compliance stuff at any time. But as being an employer, as Doug was talking, there's just seems to be so many barriers to entry, or it can be overwhelming to maintain compliance. And there's compliance when you have a health plan and different types of health plans that you offer. So you're going to want to understand first and foremost, if you qualify or as part of the Affordable Care Act. So if you are a employer with 50 eligible or 50 full-time equivalents, that's what that FTE stands for, is 50 full-time equivalents. You'll want to figure that out. And the minimum hours for full-time is 30. So you would say all of my employees that work 30 hours or more, they're full-time. Everybody else, you aggregate their hours. So instead of by employee, you'd say, okay, you average out all of the hours and then you get to 30, and each 30-hour block. So let's say you had an additional 25 employees that came out of that full-time equivalent calculation. Now you are, yes, an applicable large employer. The IRS has just gotten way stricter on this. I will say that for sure. They are making money here, and they are not as lenient as they once were. They said that the law has been in place for over a decade now. Employers should know that it exists. And so, we're not going to be waiving for not paying attention. We're not waiving penalties for not paying attention. There is a penalty for not filing 1095-C reports. There is a penalty for not offering coverage. And there is a penalty if that coverage is not affordable and your employees go into Your Health Idaho and qualify for a tax credit. So You can offer qualified health, a group plan that can also look like minimum essential coverage, which is just paying for wellness visits. That would insulate you from the pay or play penalty, but not the, well, actually, if you have a MEC plan and you enroll, you can't enroll. It's a qualified health plan technically, so you're not supposed to enroll for a tax credit. But that can meet that minimum for you.
Hey, Lindsay,
Yeah.
we did have a 10-minute time, and I hate to cut you off, but I want to make sure we can still get to the other panelists.
Sure.
Is there any way you can share your presentation with us so that we can get the full effect of it?
Yeah, of course. Sorry, I wasn't watching the clock.
No worries. Thank you so much for this. It's been really, really informative for sure. And I'm sure people will have questions. So do make sure you share it so we get that information.
Okay, great. Thanks.
All right. Sorry to cut you off. You're awesome. Casey, we'll go straight into your presentation. This is for our next panelists. We'll have Casey and Nathan talking about enhancing branding and reducing costs with consumables and marketing. I'll let you take it away.
Sounds good. Let me pull up my screen. Can you guys see this? I'm Casey with Forstall Piper Martin. Switching gears a little bit to talk about branding and marketing, but just a little bit about FPM. We have been around for 40 years. We specialize in branding and packaging design, but really cover the scope of anything the marketing umbrella touches. We are based out in Boise, but our work is nationwide. Kind of like I said earlier, here's a little bit about what we do. You know, like I said, we specialize in branding and packaging design, but extend to websites and branding and other advertising campaigns. And again, pretty much anything the marketing umbrella reaches. And here is our cutie little team. So starting out with building a strong brand, I think it's important that we first are all on the same page about what is branding. And I know a lot of people think branding equals logo. And while that is true to a sense, there is way more that goes into branding, as it really represents your identity as a business and what you stand for. One thing that I like to say when people ask what is branding, it's pretty much anything that any perception, association, or visuals that your consumer connects with your brand. That's branding. Let's see if I can just, So what goes into creating a strong brand? A strong brand involves, you know, the things that we just discussed: logos, cohesive color palettes, well-designed websites, differentiation from your competitors, but most importantly is consistency. So the consistency across any place that your end user will come across your product. So in your marketing and communication, all of your branding needs to remain consistent, because this, you know, helps your company stay at the top of their mind when they see your product or service or hear someone talking about your brand. They're able to make those connections really fast. So here are kind of, just to break it down, these are the 4 elements that I think really help describe a strong brand. So strong brands have standout visuals, differentiation from their competitors, clear messaging about why they're different and why they're the best, and they're consistent. So I wanted to show this little example here. Ralston Family Farms is one of our clients. They are a family farm based in Arkansas, and they came to us to help bring their brand up to the next level. They got into Whole Foods, and they just wanted to make their branding pop off the shelves next to all the other rice products in that category and make an impactful change in their business. So starting out with standout visuals, our team modernized the look of their logo to really, you know, encapsulate the innovative nature of their company and products. So we used bright colors and more modern font that stood out. I'll show you what their branding looked like before, which I think gives a pretty good comparison, but to make this difference for them to stand out on the shelves. Differentiation, again, in order to be successful, they did have to stand out. There's so many products specifically in the rice category in the stores. And so they really had to stand out on their own. So we chose these bright poppy colors to not only differentiate between the SKUs, but also between Ralston and the competitor sitting right next to it on the shelf. For clear messaging, you'll see up at the top, Grown in America and Family Farms. Those are the two of the most important pieces of Ralston Family Farms messaging that they really wanted to get across, that set them apart and is integral to their brand. And so we made sure that that was clear and apparent on their packaging and throughout their branding. Anywhere you look up Ralston, those are kind of the key messages that you'll see that we're promoting. Inconsistency, kind of the same thing that I just said. Anywhere you find Ralston, the branding is going to be consistent on their social media, on their website, on their packaging, on their marketing collaterals. If you were to see them at a trade show, you'll be able to recognize them right away because they are consistent. They don't stray from their color palette. They don't stray from their type. They don't stray from their messaging. It's all consistent. And although the colors are different on the SKUs, it still remains consistent with their branding color palette, which is really important. And I know a lot of companies, that's kind of a piece that they struggle with, wanting to differentiate between their products while still remaining in the branded color palette. So here's the example of the before and after logo that we did for Ralston Family Farms. We wanted to make their new logo, like I said, innovative. What they had before is more, came across as more something you might pick up at a farmer's market or at a mom and pop shop, and they were ready to scale, and they had landed a spot in Whole Foods, and they're in the Boise Co-op, and they're in all of these new stores. And so they wanted their brand to kind of speak for itself and show that they are worthy of their place in their stores. So that's what we did, and we were really proud of that. And here's the packaging before and after. You know, the one on the left does blend in a lot with what you would see currently in the rice aisle, specifically the more neutral, earthy tones. We wanted to translate that to make it make sense still. Like, we didn't want to go too crazy, but to have it pop and stand on its own and just give it a fresh, clean look. And okay, the second part that I wanted to talk through is some budget-friendly marketing campaigns. So again, why bother with marketing? Something that we talk with a lot of our smaller clients with is they tend to think marketing is the thing that they need to hold back on or cut their budget on at the start because they have so many other expenses. Business is expensive, running a business is expensive. But not really realizing that without effective marketing, selling becomes a far bigger challenge. People, especially as you're starting out, people need to know about your brand in order to purchase and grow your business. So some budget-friendly marketing campaign tips. Here you'll see an example. Laughing Tiger Foods is one of our clients. We did their packaging design, branding, website, and socials for them, but I wanted to kind of use them as an example as we work through some of these tips. So my first tip, be where your consumers are. Don't waste your money on platforms that your consumers aren't. We knew for Laughing Tiger that their key demographic was Gen Z and millennials. So where are Gen Z and millennials? They're on social media. They're on Instagram and Facebook. And those are kind of the two platforms that with our research and our data, we knew that that's where we needed to start. That's where we needed to hone in. And so we didn't waste our clients' marketing spend anywhere that their clients are or anywhere that their consumers aren't. We do see this a lot of the times with clients. They're really stuck on an idea of, let's say, for example, a billboard because they saw a competitor using a billboard. They really, really, really want to spend their marketing money on billboards. But in reality, their consumer, first of all, billboards, that's a whole nother conversation, but their consumers aren't the same necessarily as their competitors. So they would be forking over all of their marketing budget on something that their consumer wouldn't necessarily be interacting with. So budget-friendly marketing campaign tip number 1, be where your consumers are. Number 2 is social media. I cannot think of a reason for any consumer-facing company, whether you're a restaurant, CPG, service, anything, for you not to be on social media. Social media is the place where you can be the most strategic and where your money can really work for you. There's so many different filters and things you can do on social media to be where your consumers are, to know exactly who's seeing your content and be able to see what works and what doesn't and be able to spend accordingly. I do know that bringing in an agency or a marketing consultant to help with marketing and social media specifically might seem kind of daunting, but one thing that you will not have to worry about is having to spend your marketing dollars twice. You would be surprised at how many times people come to us, not first, but second. They try to do it on their own. They spend all this money putting out a campaign that they think is where their audience is, and they think the messaging is going to resonate and they think it's going to work, for them to spend it, realize it doesn't, and then have to come see a consultant or us at FPM later to do kind of the heavy work for them. So that's something that I would really consider to help make your marketing the most cost effective, is to seek a consultant or seek an agency first, instead of having to, spend your money twice. Let your money work for you, and not have to do it again, because that's very frustrating. And similar to branding, you want to be consistent with your marketing. You don't want to spend all your marketing dollars in the first month and say, like, I'm going to set a goal. I'm going to post every day. I'm going to be in front of my consumers. We're going to go, just to get burnt out in the 4th week of the month. Say, I'm done. I'm not seeing the return. We're going to take a break, not do anything, just for you to stop for 3 months to pick it back up. The key for marketing campaigns is to stay consistent, because again, it is long-term more budget friendly, because you're able to not have to pause, restart, pick it all up where you left off, because it doesn't really work like that. It doesn't really, the way social media and digital marketing specifically works is it compounds over time. Like, the more traction, the more consistent you're going to be, the more successful your campaign will be long-term. So yeah, I know that was kind of fast, but the key takeaways here is, for your branding and your marketing campaigns, in order to be the most cost effective and smart with your money and your spending, especially for us smaller businesses, is to stay consistent and start out on the right foot before getting too deep off the deep end and having to tread back up to start over again. So I'm free if you guys want any help. We do consultations, and I'd be more than happy to talk if you guys have any questions. So thank you.
Thank you so much, Casey. That was really helpful. It was a really great presentation for our members. We'll go right into Nathan if there's no questions really quickly. And then of course, Casey, please do hang back. So if there are questions at the end of the session, you can jump on in. Nathan is with Lewiston Tribune and Revolve Print Impact. Nathan, if you're ready, we're ready for you to jump on in here. You are muted though. We'll have you unmute so we can hear you.
Okay, we should be clear now. Can you hear me, Tammie? Thanks everybody, and Tammie, thank you. It's a pleasure calling you, tapping in from downtown Lewiston. We probably owe a thanks to, and perhaps you met Tammie or others, Tobe Finch, who is the owner operator of Happy Day, now Happy Day Local, with the regional food strategies here in downtown Lewiston. Tobin and I are friends, and was up kicking around his new in-process food distribution facility in Lewiston, and I couldn't help but mention a potential a talking point, conversation worth having about a paper and packaging company we've started up here in downtown Lewiston. Casey, everything we do is entirely separate or unique, or perhaps a complement to the solutions that you and your cool company provide. So it'd be fun maybe to visit sometime. But
Yeah.
I'd love to get your take on what we're doing here in downtown Lewiston.
Yeah, for sure.
So keep me on track, Tammie. Give me the elbow or the hook as you see fit. I can't help but want to spend a couple minutes perhaps just telling you a little bit about who we are here in Lewiston, and then kind of how we got to where we are with Revolve Print and Pack, and then maybe just outline some cool products and different opportunities we've developed over the last couple of years here. Briefly, we are an old school company started by a great grandfather and a great great uncle 133 years ago. So for better or worse, you're talking to the fourth generation editor publisher of a group of newspapers called the Lewiston Tribune and also the Moscow Pullman Daily News. Let me pull up a quick slide here really quick. Let's see, that's not the one. I can show you. Is that visible, you guys?
Yep, we can see it.
Okay, cool. Anyways, briefly here, and then I'll flip to another PDF, but you can see we have built it to help complement our newspaper here in downtown Lewiston. That's the Lewiston Tribune, and also a really cool daily up in Moscow called the Moscow Pullman Daily News. We have perhaps some things in common with you all, in that our small company, family owned again for 4 generations, has been facing some disruption, or pressure might be another way to put it. And that the pressure points that the journalism industry, television, radio, newspapers have faced over the last handful of years, really starting in the fourth quarter of 2008, has been what I kind of deem to be the Amazon effect, with the brick and mortar retail being on decline. Also the monopolies that have really sprung out around Google and Facebook. Also the evolving media kind of appetites, right? Media literacy, kind of competition for all of our attention in today's world, digital world, and also a lot of rising costs for small companies like ours. Inflation, labor, all of our raw materials are going up. But I bet in there, for each one of you, there might be some parallels for us. So rather than do what most of the publisher types do at the conferences, where you kind of hit the doomsday drum, so to speak, we have adopted a mindset here at our family-owned company of having a mindset of being more of a warrior mindset rather than a victim mindset. And part of that has led to a really exciting evolution for our kind of old school newspaper, where we've started 4 different companies over the last 6 years or so to help provide a solution to the economic disruption that our small company has faced. That's all with the goal of making our towns better. You know, it might be analogous to a good, healthy food stream and a healthy local economy, in that we are responsible for a good, healthy report of community information that our founding fathers deemed to be essential to a healthy community. Independent journalism essential to a healthy county and a healthy state. So we have a full-time reporter at the State House in Boise as well. But anyways, as all the economics have been changing, we've started a handful of companies, and I'll just list them off really quick. We started a really robust direct mail company. So this isn't per se on the packaging front, but we have a direct mail company. If you're looking to do business in Idaho, we have a solution there. We have an outdoor a billboard network that is also an option within our region between Lewiston and Clarkston. We have a very robust commercial printing division here, again, sustaining our probably 95 employees here in downtown Lewiston. And then we also have a digital marketing agency, which is a very common playbook for small companies, journalism companies attempting to evolve. But the one that I really wanted to pause on for you all was to wave my arms again, with your permission, just because I'm passionate about it, is a company that we started just last year called Revolve Print and Pack. where what we've done, you guys, is we've effectively figured out a way to retrofit a legacy newspaper press. So in downtown Lewiston, we have the largest and newest printing press this side of the Mississippi River is in downtown Lewiston. And we effectively retrofit that press to produce kind of custom paper-based packaging solutions, nothing like Casey is offering, but instead we got our start in offering like branded and plain, but branded void fills. So if you order a pair of boots on Amazon or name the other shoe company I'm forgetting, that comes packed in that paper, the void fill inside the box to prevent the product from migrating in the box. So we're able to offer, for example, one of our primary customers is a employee-owned company in Moscow called Northwest River Supply. They manufacture all sorts of whitewater and outdoor equipment. And then if you order something from their website, you of course have the experience of the website, but nonetheless, you get the box in the mail. When you do the unboxing, you open up the product and they have a all recycled, all Northwest made branded void fill where they can print messaging on that paper. So it's an opportunity to connect with their customers during the unboxing to share their commitment for a sustainable packaging solution rather than the single-use plastic, which is under scrutiny these days. Instead, they get this canvas putting their packaging to work, so to speak, within the box. So we provide an alternative and low-cost alternative to these single-use plastics or kind of like Canadian-produced craft paper. Instead, it's all produced right here in the region. But our focus has been on obtaining all the certifications for a planet-friendly process. And what we did was we found that if we expand our solution to other paper types, so we can, this is a mouthful, I get it, but what we do is we print on this massive roll of paper, a raw material from the mill, and we brand on it, and then we convert it to whatever width and length the customer needs. So for example, another customer we have with Tobe Finch is we're doing tabletop paper for one of their Italian restaurants. So you can see that we're able to do full color branding on the front of that paper at all sorts of different widths and lengths. The cool thing that we've gotten into lately, which I think may pique some of your interest, is we've branched out into all Inland Northwest made butcher paper. And the butcher paper has really taken off just in the last few weeks here. I'm trying to minimize this so I can show you another slide here, one sec. But I've got a picture of the let me see, guys. And this is a PDF, so hopefully you can see it, but we branched out and we're now providing probably 4 or 5 different meat butchers, meat cutters. And you can see great grandpa there in the 1800s in Lewiston starting up the Tribune. But we're producing, and I'll show you a picture here in a sec, of some really cool created branded butcher wrapping paper. And I'm pausing here. I'm not having the presentation down perfectly, but this is a really cool piece. If you can see it on your screen, Tammie, give me a thumbs up. Cool. So we have been buying paper from the same mill in the Inland Northwest. It's actually located between Spokane and Coeur d'Alene since before World War II, so a grandfather. And what we do is we take all of our reclaimed paper from our current week's production, little trim pieces and all that, and any recycled paper back up to the mill. And you can see, as illustrated in this diagram, within 113 miles, it's kind of a buzzword now, but since 91, we've had a closed loop of all of our reclaimed paper. So it's going back to the mill, being reconstituted in their fiber reclaim division, and then shipped back down to us subsequently, paper at varying degrees of recycled content back to us, and is being repurposed and reutilized within that 113-mile closed loop. So it's nice to be able to say it's literally a low carbon footprint production process. We use all these really cool ecological inks that are notable within the industry. We've applied for Kodak certification for this chemical-free print process. And it's allowed us to, you can kind of see quickly, just do all sorts of different ecological paper converting solutions. And here you can see we can do it at any width or length, which is how we're doing custom table toppers for restaurants, or whatever width and length of butcher paper that our regional meat cutters are using. We do it in all sorts of countertop rolls. So it could be for e-commerce like the River Supply Company, or it could be like Tove's buying for table toppers at the Italian restaurant, or it could be for the butcher paper solution. Scrolling down here, just looking at a couple notes, we have a really cool paper, you guys. It's 100% all recycled. It's right there's the NRS. It's all recycled content. It's 100% post-consumer. So we're doing branding again for a couple different e-commerce companies, including the University of Idaho and their Vandal store as of late. And then we're also offering a bunch of craft rolls branded. We're now doing some wrapping paper for the University of Idaho too. So like a Joe Vandal wrapping paper around the holidays. So if you can imagine, takes a little creative stop in the thought process to think of how this could apply perhaps to KCU or any other family, friends, or small businesses in Idaho. But there's all sorts of applications for wrapping paper. Pardon me as I scroll, we have all sorts of newsprint, no surprise, there are different paper grades, but the one I wanted to stop on is coming up, I promise, if I'm not making you dizzy. This one's worth noting too. For world market, we're doing an all recycled alternative to like that green plastic that comes in the Easter basket when we were kids. Anyways, a really cool kind of all recycled Northwest made eco shred, but I'm getting down to it. Oh, here's a butcher in Moscow called C&L Locker. Was kind of our first customer, and you can see a quick picture there, but a really nice blend of TCF, they call it chlorine-free paper, that's tested really well, designed specifically for wrapping meat, fish, and poultry. And again, it's a way for meat cutters to connect with their end users or customers to kind of deepen that loyalty and share values about their best practices. And then we also have branched out, and this has been fun too, to a meat smoking paper. So we can brand, you probably see it like Ace Hardware now, it's kind of a pink grade paper, to where if any of our butchers want to offer a local branded or a custom branded meat smoking paper for the low and slow meat cookers out there, that's a really cool solution too. Was hanging out with some of our friends from West Coast Paper up in Spokane, and I love what their regional vice president said. He kind of got excited with me and said, man, this is really akin to like the closest thing to farm to market there is. It's almost like a mill to market, you know, a regional market play. So we're expanding our partnerships and relationships with all sorts of different industries based on that regionality concept. And it really fits in well, we thought, with your goals, Tammie and team, and Tove Finch, of supporting independent Idaho businesses, you know, of connecting perhaps a small company like ours with a long-held mission with the local meat producers or restaurateurs or food producers, where we could complement, not so much like Casey was saying on the shelf, but more in that tabletop or in that wrapping paper or in that butcher paper market. I've got a really terrific coworker on this call too. She's a sales director for all things Revolve and the other divisions that I mentioned. Her name is Becky McKinstry. So anyway,
hello everyone.
Don't be shy, Becky. She is amazing. But we are entirely grateful for the opportunity to visit, and would love to share what we're doing at restaurants and meat cutters and e-commerce stores, all just now starting, really kind of in our infancy. It's just a couple of years of operation. So
yeah, this is incredibly cool. Thank you so much for you and Becky both showing up. This is a really innovative product, and we're really excited to be able to share it with our members, and we think that you're going to have a lot of takers across.
Oh, that's cool.
Yeah, it's definitely cool. I don't know if you saw in the chat, but Lindsay also was remarking on how cool this is.
But we're the only one in the country that's kind of doing it, so it'll be fun as we hang out and get to know each other. You'll either say, Becky and Nathan, that was a reasonable idea, or you guys really missed the mark on that one. So you're kind of founding partners with us. Thank you.
Well, I love it, and I hope our members take you up all the time on it. I think it's very cool. We will roll into our next if there's no questions. I don't see any questions in the chat, and we are running out of time. I wish we could just keep going with all of these things. They're all so cool. And if each of you that did present with slides could throw your slides in the chat, that would be really great. That way we can share them too with our members. If you guys are open to that, we can share those out when people have questions. Our next is operational logistics, financing, and commercial real estate. And we are going to go pretty quickly with these, but it doesn't look like Devin from Alsco is on our call. Let me just do a quick double check really quickly in the chat or in the participant list. And yes, I still don't see him. So we'll skip Devin. And Dane, you will be up with Ag West Farm Credit, talking about financing options for farmers and ranchers, including navigating agricultural lending and business growth strategies for producers. Dane, if you don't mind scaling back your presentation just a couple minutes so that we can make sure that there's still time for everybody on the call.
Sure, sounds good. Thanks for having me on, Tammie. Got good audio and everything?
Sounds good. Thank you so much.
All right, thanks. Yeah, so Dane Johnston with Ag West Farm Credit, and we are a cooperative lending institution all throughout the Pacific Northwest, Montana, Idaho, Oregon, and then also into California and Arizona. And we primarily work with farmers and ranchers, so the producers of all of the products that we love to eat and drink. We have a couple different kinds of financing. We work with, we do short-term lending, excuse me, for like operating lines of credit, so operating expenses, you know, fuel purchases, seed costs, fertilizer costs, those kinds of things as well. And then intermediate term financing for equipment and livestock purchases as well. That's pretty much any loans 3 to 7 years in length. And then we also do real estate purchases. So basically anything 7+ years and above, we can help people out financing their real estate. The big thing, two big things that I would like to highlight for everybody today, and then please feel free to reach out with any other questions since we're kind of short on time, but is our Ag Vision program. So this is a program that we have here at Ag West Farm Credit that is specifically for young, beginning, small producers, YBS we call it. And I will share my screen real quick here.
And if our members are curious, they can see that in our newsletter as well. I don't need to interrupt you, Dane. I just wanted people to know that that program will be highlighted in our newsletter that's coming out tomorrow morning.
Yeah, I appreciate that, Tammie, that plug. If everybody can see my screen there, this is our website. And you can find this just by going to agwestfc.com, so agwestfarmcredit.com. And this is our whole page here for our young, beginning, small producers. And at Ag West, we really strive to be big on becoming a trusted advisor, a trusted partner for your farming or ranching operation. And this website, I think here kind of shows that, demonstrates that. We have all kinds of resources on here for, do you have a business plan? Do you know how much collateral you need? Do you understand your credit score? Those kinds of things. And then down here towards the bottom, we have all of these learning resources. So we literally have videos and templates for all these, balance sheets, income statements, cash flow budgets, all the kind of things that you would need if you're going to go to a lender and request a loan for your business. And then lastly here, I'll just highlight our new producer grant as well. And this is a big deal for us. This is our 3rd year doing this, I believe, at Ag West. And so you'll notice here the grant amount is $15,000. We have 30 of those grants, and they are designed basically to be seed capital. So if you are a new producer wanting to start an operation, this is something that you should definitely take a look at. You can use it for any capital purchases that you want, and all the eligibility criteria and the application is down here on our website as well. So hope that's helpful, and let me know if there's any questions.
Dane, thank you so much for that. I don't see any questions in the chat just yet. Can you just give the parameters really quickly for that grant so that those that are curious, grants are a little precarious right now with federal grants are a little precarious right now.
Mhm.
So having this as an opportunity is really great.
Yeah, definitely. Well, and thankfully our grant is not tied to any federal government program, so it's a for sure deal going to happen this year and for the foreseeable future here at Ag West. We've had a lot of great feedback from it the last 2 years that we've done it, and the kind of the basic qualifications are that you have to be within our lending territory, so Montana, Idaho, Oregon, Washington, certain parts of California and Arizona. You can find all of our area on our website. Just go to agwestfc.com. You cannot be a current AgWest customer, unfortunately, for those of you that might be a current AgWest customer, but we wanted to tailor this towards new folks that were just trying to get started and get their feet wet in the system, and then need to be 2 years or less in your operation. So if you have not started your operation yet, you can still apply as long as you have a solid business plan and a way to go forward, or if you've only been operating for 2 years or less.
Awesome. I love it. That's wonderful. Thank you so much, Jane.
Yep, thank you.
We can go straight into you, Nicole, if you're ready to go. Nicole with Cushing Terrell is going to tell us about best practices for designing functional, efficient spaces for food and ag businesses from retail to production.
Ah, excited to be here. All right. Can you guys see my screen?
Yep.
All right. So, good afternoon. I'm a director of architecture and associate principal with Cushing Terrell. I lead our Caldwell office, but I also find myself in our Boise office quite often, or wherever is needed in the Valley. I've got 23 years of experience in design and architecture, and project management. And I think the biggest thing, I'm going to try and keep this really short so I leave Greg some time to talk, is the takeaway for today is to reach out to me or someone at Cushing Terrell to really help you just run through your project and get a free project consultation. We offer that to all FAIR members. And really what I wanted to cover today for best practice was kind of brick and mortar 101, and that's the due diligence portion of a project. So this is my phone number, this is my cell number. Feel free to call me at any time. Really quick before I jump down into due diligence and items that I think are really important when you're thinking about either building new, purchasing your own land, or if you're going to lease and do a tenant improvement, is just where we're located and how we can serve members of FAIR. So we've got an office in Caldwell and Boise, so I feel like we have a really good understanding of the Valley, but we're the rural architect that gets in our car and travels. So we will travel to eastern Idaho, to central Idaho, up in north Idaho. We can service anyone there from Spokane or our Missoula or Kalispell offices. So I feel like we do have the state pretty well covered. And like I said, we do work in urban areas, but also rural areas as well. And we can be an a la carte design, architecture, and engineering firm where you pick and choose services for us, or we can be a full service and take you from beginning to end, just really what you need. So I wanted to make sure everybody kind of says we're not just Boise, we're the whole state. Okay, so let me go back, sorry. All right, due diligence, and I'll put a link to this in our chat. I think the big thing is when you're thinking about your budget, oftentimes people are thinking about hard costs, construction, but there's a lot of soft costs involved. And I've got a spreadsheet I can share with you where soft costs can be between 10 and 15% of your construction costs. And so it's not a number you want to ignore. If you're doing a new development and you're purchasing land, you may need to get an environmental report that lets you know before you purchase that property if there were underground tanks or what the use was, and to make sure that you're going to be able to develop it the way you want to. You're going to need to get a geotech report to understand those soils. You're going to need to get a land survey. I love Alta surveys because they will help you uncover that Idaho power easement that runs through the middle of your property that you can't build on. Your county assessment maps or city maps will show zoning. It's really important to understand if the use you want to use is actually currently zoned, or if you're going to have to go through a rezoning process. And I'm not afraid of a rezoning process, but you just need to understand it's going to be time and money and maybe a fight. It's really good to understand, especially if you're going agricultural use and you're using water in your processing, what are your water rights? And if that's going to take some time to work through. Understanding location of utilities, again, is really important. Let's say if you're doing an urban development with 0 lot lines, you're not going to be on the hook to do storm drainage. But if you're in a suburban or a rural setting, you're going to have to invest in that storm water. So that again can affect your bottom line. It's really good to do some site and building test fits, to do a code analysis in those due diligence phases. And then of course you can go through the typical, what you think of as, your SD, which is schematic design, design development, construction documents, and construction administration. Greg's going to talk a little bit about real estate and I'm sure tenant improvements, but really quick, some things you might not think about. You may need to get an asbestos and lead testing report. If it's an older building, especially. Depending on how old or complex the building is, you might want to get a building assessment report. So that can be everything from making sure that the site supports how you want to use it, to architecture. Are you going to need to do upgrades for seismic? If you're going from a B occupancy, which is a business occupancy, so say soft retail, to a restaurant use, that's an accessory use, you're going to need to look at what your floor structure can even hold, because you might have to upgrade it from 60 pounds per square foot to 100 pounds per square foot. And it might be as simple as adding a couple of posts in the basement, or it could be pretty elaborate. So that's a good thing. Make sure that you've got electrical capacity for your use. If you're getting into processing or a kitchen use, that might change. If you're getting into a kitchen, into a space that didn't have a grease interceptor and you need it, or it needs a hood and the building doesn't have it, that'll kind of add those costs into your bottom line. So really important to understand your leasing terms. What's the landlord going to provide for you versus what you're going to have to provide? And then again, kind of code analysis, test fits, and look and feel. I'm going to try to pull up another spreadsheet, just real quick to kind of show what this can look like, and then I'll turn it over to Greg. So this is what a soft cost analysis could look like. So again, you're looking at kind of the construction costs. This was from 2020 because I don't want anyone to use costs. They're too crazy right now. So don't look at the bottom line here. But you can see, just looking at services for design, those reports, business permits, the different review fees, as well as permit fees, and just different connection fees that can really add up in a project. This was $176,000. So it's almost 20%. So that's what I just wanted to share. Please reach out. anytime. Would love to talk about your project and what you need to include in it.
So helpful, Nicole. I did have a question. If somebody's, sorry, Greg, if somebody's, and Greg, you can jump in. Actually, this is probably a joint question anyway. Before I ask it, actually, Greg is with Lee and Associates. He's going to be providing insights into transitioning into brick and mortar spaces and trends in Idaho's commercial real estate market. But if somebody were new and looking to get their business off the ground in a brick and mortar, where would you say that they should start? Would you be, once they've got the financing, they've already gone through Dane, they're already got, you know, whatever they're doing, they're already figured it out. And now they're ready to go into their brick and mortar. Where would they start?
Well, if they came to me as an architect, I would refer them to Greg as far as looking for spaces, right? And I would maybe help them develop a program if they didn't have that already. So that would be, what's your use, what's your square footage, what types of spaces are you looking for? And then once they've got that program, they can take that to Greg, and then Greg can help them find that property and that best fit.
Perfect.
Or if we get the tenant in this case, or the owner, we will take that. And architect's a critical part of it, and a lot of people forget that too, because it technically they say soft cost, but if you're moving into almost any space, zoning's critical. So once you have identified zoning and the use is available, that's great. Sometimes you have to do a conditional use permit. A zoning change, yeah, absolutely. You need a architect or a firm like Cushing Terrell to come in, step in and assist on that. There's just a lot that gets done that you could run through it on your own, but unless you've done them before, you're looking at a giant mountain. I would never do that. So there's a lot of things you want to look at, especially due diligence. That's huge in both of our industries, but as far as brick and mortar, every single business and every single building is different. Every landlord's different. Every contract's different, whether it's a purchase or a lease. It's not anything that I can even put into really a presentation to say, oh, this is the steps, here they are, because they all different across the board with everything. But I can tell you I'm available to guide you in the right direction, to the right resource for sure. Absolutely can answer questions with regard to specific brick and mortar. I do a lot of specialization in restaurants specifically, but other things as well. I also do a lot of land. I understand farming, I understand water rights. So those things are all encapsulated in at least being able to use me as a resource to find the right professional that can guide you in the right direction with that. But a lot of what's being said, especially from the architect standpoint, hopefully, at least with my service, I get joked a lot that I'm a full service commercial broker because I go the extra mile. I confirm zoning, I check zoning. It is always up to the tenant or the buyer to confirm that information, but at least I give you a map to get there and contacts and who will be able to confirm everything to you. But once that's done, yes, depending on what you're doing, ideally, if you're a restaurant, you're going to move right into a restaurant space that's already fitted with the exact hood you need, the exact ventilation, air equalization, floor sinks, grease interceptors. I mean, these are all things that a lot of people don't think of. There are ways around it, but you want to get with, again, the architects, the health board, the city, the county, to determine, okay, can I use a grease interceptor or at least an inline grease interceptor if you're retrofitting a current restaurant? That's an expense, typically a quarterly expense, depending on how much you're doing. It could be a monthly expense. But then again, you also want to identify spaces that potentially were made as a gray shell with grease interceptors, because it makes everything easier. But again, hoods, airflow, architects, engineers, stamping for specific things required for that kind of stuff. A lot of things are similar. Your Alta surveys, those types of things where you're looking at title reports and so forth to determine easements. Our job is to make sure that information is out there with the particular space, or we've at least asked for it and addressed it with those people that are selling. But I could quickly touch on trends. We're seeing a massive expansion in Boise and all of Idaho, really, with regards to retail and industrial. Office will hold its own. It's been fairly standard level lined. It'll continue to be that probably through 26. But it all comes down to the population growth we've seen in Idaho, which is really almost doubling of the population in 20 years. And so you also get into property value increases. I can tell you, especially with a transition from into brick and mortar, your location, your zoning, and where you're looking, rates are going through the roof. In a lot of cases, questionably as far as sustainability. The 10-mile corridor in Meridian between the freeway and Chinden, you're experiencing square footage prices in the 40s with triple nets that exceed $7 a foot. You're $50 a foot. Very difficult for a mom and pop, any restaurant for that matter, or retail to take down that kind of liability on a monthly basis. So just getting with any expert that can represent you or help you along the way in this process. And the more planning you do in the beginning, the better off you're going to be. So I absolutely do pride myself on tenant representation and then land listings, et cetera, so I can work on both sides. But I think the big thing is I'm available. Reach out to me. I put my information in. You can reach me also at 208-501-4321. I'll answer any questions you have with regards to any type of commercial real estate that you're looking at. And if I don't know it, I'll point you in the right direction. I will always tell you to get somebody to represent you there. In a lot of cases, especially from tenant rep or purchase, it's not going to cost you anything. So I'll cut it there just so I don't keep going.
Thank you. And I will absolutely keep referring people to you like that, come and ask questions about this. I do have one question. I used to work in economic development, so I used to get a lot of questions about starting businesses and getting businesses to market. And the overwhelming question I'd get from people that were going into their first brick and mortar was, what the heck is a triple net? Do you want to explain that?
Yeah, triple net's pretty simple. It's the insurance, taxes, and maintenance of a specific property. So it can get a little more detailed from there. You have, typically you'll see office space that is full service, but that could also be a base year, which then adds CAMs, which are charges like triple nets to operate the building. So triple net is, again, insurance, taxes, and the maintenance of the building spread out over all of the tenants and then divided by each tenant's percentage of that building. And then it's done annually and then paid out monthly. And it's typically estimated and then followed up with a audited statement for everybody at the end of the year. But yes, it can get substantial. You always want to look for a lesser triple net, that just, not to say it's a well-managed or better managed building, but they do have their costs typically under control. And some of that they can't control, like the taxes, those will go up. But there are things we can do when you lease space or you purchase a building, well, mostly on the lease side, but there are things we can do to cap CAMs at certain percentages and things like that that'll protect you. You always want to have those leases looked at both by the agents and an attorney just to confirm everything that's going on, so you know exactly what your costs are going in. But those triple net costs are typically, you can always negotiate also on the base rent or the square foot rent to make up for sizable triple net charges, which we commonly do as well. So TI charges, like Nicole had stated, you know, when you get in, it's important to know your tenant improvement charges, or TIs. A lot of times building owners will help with that, especially on a new space. It's never going to be enough to put a restaurant in, but getting anything to offset that or being able to negotiate that triple net allowance, and then how the allowance is paid is another thing. A lot of times the landlords want to put that onto the tenant, but at the same time, the tenant shouldn't have to come out of pocket, you know, whatever the amounts are for a very short term and get a rebate or a refund on that 30 days after occupancy. So there's different ways to structure it so that you can save your capital and still come out where you need to with a TI, et cetera. And or not hidden, but soft costs that are often forgot about, like architects, et cetera. So yeah, that's triple net.
Yeah, thank you for that. That is I think that's a cost of having a brick and mortar that not every entry level business has equated. Yeah. Well, thank you guys all. Thank you all for hanging with us and for staying for any questions. I don't see any questions in the chat just yet. But everyone here has put in their contact information. And if you don't have it, I have it, and I can absolutely connect anybody with all of these people should you wish. And I am going to upload this to our YouTube so that our members can continue to enjoy it. And I've downloaded everybody's presentation so that if anyone asks for it, I am happy to share it with our members. Thank you all for your time, and thank you for your presentations and for your expertise. We're so happy to have you guys as partners, and we're thankful that our members can utilize your services, because there's a lot to having a small business, as we've learned. Thank you guys.
Thank you.
Thank you. Bye.
Thank you.
Bye.